Like, this deal is really interesting. So first, let's just give huge kudos to the CEO and the team and the investors. What an enormous win for all those folks. That's awesome. It keeps Silicon Valley kind of going, right? And that's just awesome to see these kind of big wins. I read this incredible profile about the founder, and he sounded like such a fascinating person. He basically, the profile basically said that he was spending months and months going from office to office all around the world, meeting customers, sitting with customers, reading trouble tickets. That's what he would do, reading help desk tickets about the product on vacation. Whenever you see a CEO that is so customer obsessed, typically there's good outcomes. And so this is just another validating point on that theme. Now, let's just put Figma aside and let's just talk about Adobe for a second. What is so incredible is you have a company, yes, they spent $20 billion or whatever, 18 billion now. But the way that they did it is really interesting. If you go back to Zendesk and SurveyMonkey, when those guys announced that merger, it was above a threshold of stock where you had to go to a shareholder vote. And because there was so much turbulence in the market, whether the industrial logic of that deal made sense or not, didn't matter as much to shareholders when it came time to vote, and they voted it down. And so these guys have to find a way for Figma to drop about $1.5 billion of free cash flow into the business for this to kind of make sense in the short term. So I think those are all the mechanics that's sort of putting a lot of pressure on the Adobe stock. But it just goes to show you the amount of disruption that happens, this movement to the cloud or the movement to collaboration.
Oh, yeah.
One thing that they have not done, which I think is the real reason they had to buy Figma. Adobe, see, this is the problem with these big public companies. Adobe and all of their investors got very addicted to the free cash flow generation of that stock. And it's been an incredible performer. And let's just be honest, Shantanu is one of the best CEOs of the last few decades in the public markets, period, end of story, okay? Since 2007, he has just run a masterful playbook. At the tail end of that, though, in 2022, this is a company that has, I think, 6 or 7, maybe $8 billion of free cash flow. It is a gargantuan money-making business. And so they refused in Creative Cloud to go to that free tier that Figma has. And if you look at all of the stories around Figma, one of the most powerful things they did was basically allow people to use this for free effectively forever. That is probably the biggest reason why they had to buy this thing, which was that they needed to tuck it in. And they're like, how can I do it? Well, I just have to do it by diluting the stock.
One time, one across every industry, by the way.
I think there's another takeaway that's really interesting here, which is that if you look at big tech companies, I think you almost have to sort them into 2 buckets, at least in the enterprise. And Sachs, you can tell me if you disagree, but there's one type of enterprise company which makes basically a single linear monolithic product or a handful of those monolithic products, right? Think Workday, think Adobe, et cetera. But then there's this other type of company, which are more platform level businesses that have this, mixture of things that they do relatively well integrated. Maybe each product is not so great, but together they're pretty decent, and you have distribution leverage and you have pricing power. Think Microsoft and the totality of those products. So what's interesting to me is you cannot effectively compete, as it turns out, against Microsoft at any point product. And Slack, I think, is the best example where, Microsoft Teams was fundamentally cannibalizing this business, which is what drove Slack into the arms of Salesforce. And, you could say that Teams was not as great of a product. I would make that claim. But what Microsoft had was distribution scale and pricing power where you could discount and effectively give it away for free. Adobe isn't in that situation, right? They can't do that kind of stuff. And so when you compete against those kinds of businesses, you have a better chance of winning. The takeaway, I think, for the entrepreneur, funny, it's like she's more focused on, making sure Amazon doesn't buy Roomba, that, this stuff that's happening.
Or Facebook doesn't buy one VR app. Yeah, it's not a very sophisticated approach. You're right.
This is the kind of stuff that actually really matters. I really think you nailed it on the head, Sachs. It's an impossible strategy to defend against. The other thing that is interesting, by the way, about all of this is, if you think that the valuation, the takeout premium, was basically 2x post to post. What that means is that if Figma was last valued at 10 is now worth 20, does that mean that Canva, which was last priced at 40, is worth 80? Well, potentially to Adobe, right? And if you add those two together now, what you really have is basically the entire totality of the Creative Cloud for Adobe is basically embedded now in these two businesses at an extreme premium. And so it makes it very difficult now, I think, as well, for Adobe to execute a strategy here without it being forced to do some more expensive, dilutive M&A. I think Canva should absolutely go public versus sell, because it seems like they'll have a much easier time competing against whomever that they compete with. I do think that, David, you're right, that there is a lot here for regulatory review, because if you go back and think about Visa Plaid, it's not dissimilar, meaning you have a young startup that has this really credible and viable technology potentially being acquired by, in that case, it was, one of a duopoly. But here you could make a very credible claim that it's in a market where it's roughly a monopoly, because there aren't really that many meaningful alternatives. So I think Sachs is right that there's some,
there's a scale.
If you look at what happened to the Visa Plaid thing, it was an enormous blessing in disguise, because, the thing went away, and that was, I think, like a $5 billion acquisition. And then Plaid turned around and raised money, and it's like a, multiple teens billion. And it's going to be a wonderful independent company, to your point, Jason, that will now, create more competition in a space that desperately needed. Now, in that case, that was sort of like financial payments and rails and Visa, MasterCard, blah, blah, blah. But that could also be, if there is a lot of attention paid to the deal and it doesn't end up being consummated, that could be the positive outcome. But it will get made not by the sales teams and not by the product teams, but it will get made by the CEO and the CFO in talking to their largest shareholders. And the reason is because there is an implied cost of capital that Adobe has. In fact, right now, if you look at like all of the models that all of the analysts use, is roughly around 9%. And so, they're going to have to achieve a return on top of that cost of capital. What that means is that they're going to be forced to find a way in short order to make this accretive and to start generating incremental cash flow. And I think that they will be hard pressed not to bundle and not to do these creative packaging strategies, because otherwise I think that there's a risk that this free cash flow machine that folks have become very addicted to at Adobe starts to shrink. And that will have huge ramifications, I think, to the stock and to the executives and to the morale. And so I think that they're going to do whatever it takes. And by the way, you've seen that in other companies who've gone into this phase of their growth, Oracle being the best example. They have consistently found ways to package, to bundle, to cross-sell, to upsell, and they have incrementally walked free cash flow generation up. There needs to be an industrial logic that is beyond just, let me just buy this thing and stick it on the shelf and let it be on its own. So I think that, that die is sort of cast. I think we're just debating the timeline in which it happens.